Well, good afternoon and welcome everyone to our program today. Just a little bit about our organization. We are EPCOR. We're a not-for-profit trade association, and we provide electronic payments education and support to over 2,200 member financial institutions in the central United States. Now, we are a direct member of NACHA, the National ACH Association, and as such, we are a licensed provider of ACH education. Just a little bit about myself. As Sam said, my name is Shelley Simpson. I am the Payments Education Assistant Director with EPCOR. I joined them back in 2005 following an 11-year career with the Federal Reserve Bank in Kansas City, and I earned my accredited ACH professional, or my AAP, in 2006. And it's certainly my pleasure to be here with you today. So I've been teaching, as you can tell, on the ACH rules for quite some time, for a little over 8 years. And I'm not really sure that you can say you've mastered them. I mean, they change quite often. They are updated on an annual basis. And so the goal here really today, even though the name of the program is Mastering the ACH Rules, I'm not going to make you an expert on the ACH rules, but instead what I really wanted to do is share with you some rule changes that have gone into effect over the last 12 months, and trust me, there are several. And I also want to give you a little insight into what the future holds. So we've heard talk of person-to-person or P2P payments, and there are a few other changes that are going to be implementing in 2014 as well. And I thought I'd also give you a sneak peek at what's going to happen in 2015. Now, as Sam said, we do plan to stop for questions and answers. What I thought I'd do is try to get us through the 2013 changes, and at that time I'll entertain any questions that you folks might have, and we'll also try to go ahead and take a stretch break at that time as well. Now, while there were actually several ACH rule changes that implemented this past year, I do want to begin with what is referred to as an operations bulletin, which is not at all a rule, okay? But it did go into effect January 1st of this past year, and it is something that may have impacted your financial institution. And this particular operations bulletin was really providing some advice or guidance, if you will, to financial institutions as well as state revenue agencies and third parties that are remitting tax payments to state revenue agencies on behalf of companies. And this was referred to as the third-party tax payment, or a new banking convention known as TPP. And if you've been around ACH for a while, you know we love our three-letter acronyms. TPP stands for third-party payment. And this banking convention is a way to provide payment-related information within an ACH transaction, within the addenda, and in particular a CCD, a credit transaction, when there are certain third-party tax payments being made. So a couple of examples that I have for you is a situation where employee tax withholdings are being remitted by a payroll provider on behalf of employers. So in that particular case, if the third-party payroll provider goes ahead and submits those taxes to the state revenue agency, it's very difficult for them to know that that payment is being received on behalf of employer A. All right, so it's very difficult to be able to determine that. Another situation where this might be used is where payments from employers are being submitted in response to garnishments, maybe for delinquent taxes. And while we had a banking convention, and we still do, known as the TXP, to be able to send in tax payments, that was really intended to only be able to identify the taxpayer. But in these situations where we have a third party involved who's remitting those tax payments on behalf of a taxpayer, we can't identify both of those parties. And so the state revenue agencies kind of came together and they said, well, we need to be able to figure out how to apply this credit that we're receiving so that it goes to the appropriate taxpayer's account. And we don't have any way to do that from an electronic perspective, and we really like getting these payments electronically versus by check because, of course, checks are very manual, very costly to process. So they came together, all the state revenue agencies came together along with NACHA, worked together and said, let's develop this new standard known as the TPP. So in a CCD payment, in the payment-related information field of the addenda record, it would start out TPP and then an asterisk, and it's going to have a lot of information. But again, a way to be able to identify who the taxpayer really is so that, again, the state agency can go ahead and process that appropriately. Now, this was implemented or was made available, I should say, effective January 1st of this year. However, implementation or use of this banking convention was really up to each state to determine. So your financial institution, if you were submitting these types of payments on behalf of a third party, such as a payroll provider, may or may not have seen this new banking convention be used because, again, it would be the state that mandates the use of that. So now that I've gotten that operations bulletin out of the way, let's get into what happened from an ACH rules perspective in 2013. So beginning in March of this year, we did see several updates to the rules. And so the first ones that I want to discuss really have to do with IAT, the international ACH transactions. And as you can see from this slide, the first bullet talks about the expansion of the return reason code R16. Now, R16 initially was developed, and the description for it says account frozen, and that could mean that there was some type of legal action against that account, or perhaps the receiving institution where that account holder holds their account was taking some sort of action against the account. Maybe they were preparing to close it or something. So R16, like I said, was available if there was some type of legal action against the account. And quite honestly, when we start looking at IAT transactions and your OFAC obligations, if for some reason that payment is in violation of OFAC, there is a party that is named in that IAT transaction that happens to be on the most current SDN list, well, really R16 would have been appropriate because there's some sort of legal action going on here. But folks didn't really understand that so much, that was the appropriate code. And, of course, NACHA has worked quite a bit over the last several years especially to make sure that the rules are as clear as possible so that people can more easily comply with them. So this was one of those, we're going to say we're expanding the use, although that was the appropriate use of it, but really let's just expand the description or the definition. And so now basically R16 says account frozen or return per OFAC's instructions. So again, as a receiving institution of an international ACH transaction, you do your screening, you come across an entry, and you know that it's a valid OFAC hit, which I will tell you those seem to be fairly few and far between, which is a good thing, but know that R16 would be the appropriate code to return that should OFAC tell you to do so. Now, our second bullet talks about a new return reason code as well as a notification of change code. And these two codes are going to be used by the gateways. So with an international ACH transaction, as we look at these, it is the gateway, which is either the exit point from the United States or the entry point into the United States that is going to be creating the IAT transaction, because IAT is only known to you and me here in the U.S. If your financial institution is sending a payment to, let's say you're sending it to Vienna, Austria, they don't know what an IAT is. You will create the IAT. It will be sent to a U.S. gateway, which is typically going to either be the Federal Reserve Bank through their Fed Global product, or it's going to be one of the large financial institutions like a J.P. Morgan Chase or a Wells Fargo. They will take the information in that IAT transaction, and they are going to translate it to a format that the financial institution over in Vienna, Austria is going to be able to process. All right, so it ceases to be an IAT on its way out of the country, and on the way in, let's say that payment's coming in from Vienna. So that payment comes across as probably a SWIFT message, and let's say that JP Morgan Chase is the recipient of this SWIFT message. They are going to be the ones who are going to create the IAT and send it to the receiving institution here in the United States. So that's a little background on what the gateway is. Now let's talk about these new return reason codes and notification of change.